Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining positive excellence in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. Please consider sharing and liking this video and also subscribing to the channel. We would love to have you as a part of our globally extended KS family. Let's run the numbers. Bitcoin is currently up 0.59% to 19,496. Ethereum is up 3.4% to 1378. As crypto technical analysts, we analyze the market in a very scientific manner. And what could be more scientific than talking about concrete and goldfish? But these are two concepts you really need to understand. I'll be coming back to this in a while, but just keep this particular picture in your mind. You can see this foundation is looking pretty wonky. It's got a crack in the concrete and quite a large one. You know, when you get cracks in concrete, the foundations actually weaken. They need to be strengthened below the ground. This is not a job for cosmetic surgery. And what's this goldfish doing here? Goldfish have been known to have very short memories. That was exemplified in the film Finding Nemo by Dory. Dory suffered a lot of memory problems. Crypto technical analysts seek to understand all of the markets, not just crypto. The first thing that they do is to mark up their charts with the CTKS method. This is a new method that updates candlestick pattern analysis to the 21st century. And it's actually applicable to the stock market and Forex. But Forex and stock market, traditional candlestick analysis is not applicable to crypto. Next, we look beyond the crypto market, collecting probabilities like a financial detective. Then we hop back into the crypto market, understanding that opportunities do reset daily and seeking to find the market's focus. But before we pull the trigger on a buy or a sell, we must master emotional control. If we don't do that, we'll buy and sell at the wrong times. We know the stock market is incredibly important to the crypto market. Looking from a global macro perspective, we can see the Nasdaq is still under pressure, and the particular major indices, the S&P 500, the Dow, the Russell, they're all still retracing. They're all still under resistance. And as the US markets go, so too do the global markets. We can see Russia escaping global markets gravity because it's just normalizing at the moment after that very big shakeout in the Russian stock market because Russia invaded Ukraine. We can also see that China remains quite weak. When we look across the MSCI All Country World Index, we can see that we've actually lost support and global markets are actually retracing. When looking at the 9 sell-offs and recoveries in the S&P 500 since 1966, married to the current price, we can see we're fairly on par for either going down or for going up. We haven't reached a critical juncture in terms of collapsing or expanding. We just need to keep an eye on things, but things are pretty much overwhelmingly negative at the moment. The reason I talked about Dory and the goldfish bowl is that people typically have very, very short memories when they put their money in the market. And that's understandable. Recency bias is a very, very problematic thing. When we look at the fear gauge of the S&P 500, the VIX, we can see that fear actually decreased in the market. We saw prices rally up to a resistance level. Multiple resistance levels are playing out in the Nasdaq. We also saw bond prices continuing to fall and bond yields continuing to rise. The dollar actually sold down from a level of resistance and gold did a bit of a technical bounce. There's still downward price pressure on oil, and we saw junk bonds just marginally recovering. Masterclass students, you get my live chart in TM6. So what is this about Dory the goldfish? Goldfishes have a notoriously short memory, so the concept is retail investors have a notoriously short memory also. They tend to just look at the market. If it's green, they buy. If it's red, they sell. We need to look more broadly. It's almost as if when people are first in the market, say zone 1, zone 2, every time it's sunny, they say it's going to be sunny forever. And every time it rains, they say it's going to rain forever. That's simply not the case, and we know that logically. We know this because we have Rule 4, price moves in waves. Price is always going up and down, but we don't want price to crack the concrete. Cracking the concrete, you say. Ken, what is that all about? Support acts as a structural barrier to prevent price from going lower. As we go through the various charts that I'm going to show you today, you can see that indeed the concrete has been cracked. We can see one crack in the concrete with the ACWI. The crack in the concrete is very, very noticeable on the Nasdaq. I'll just zoom in so you can get a better view on this. We had quite strong support lines in at 11,462 and 11,455. They were actually broken. The concrete got cracked. Even though we saw a recovery, that concrete is now cracked. Just to explain a little bit more, these particular lines act as support. If the support gets whacked through with force, that actually means that there's a lot of sell pressure in the economic system, and you can see how price wobbled around a lot. And we have the FOMC meeting coming up in a few days. There's an 82% probability that the Fed is going to hike interest rates up, or the federal funds rate, by 75 basis points, and there's an 18% chance of a 100 basis point increase. It's important to note that 1 week ago, there was 0% probability of a 100 basis point increase. And 1 month ago, 100% basis point was just not on the table. Nobody was talking about it. Everybody thought 50 basis points at the most. We always have to keep a very open mind about what happens in financial markets because they're incredibly volatile. If we look at the US inflation rate and US inflation expectations, this red line, what we've seen in the past is basically inflation expectations got really, really hot, and now they're decreasing relative to the inflation rate. That's giving a lot of people cause for confidence and celebration because forward expectations of inflation rates getting baked into decision making was a big problem that the Fed and central banks around the world had to cover off, had to solve. But when we look at the federal funds rate prediction for April 2023, you can see that it's still coming up. It hasn't dropped. And you can see the relationship when the federal funds rate has the prospect of increasing. What do you notice with the Nasdaq and Bitcoin? They're coming down. This is a really important thing to comprehend and understand. There's so many interdependencies in the economic system. It's good news that we see the 10-year break-even inflation rate and the 5-year break-even inflation rate continue to decrease. And we can see the Fed balance sheet has actually increased. It was 8.822 trillion. Now it's 8.833 trillion. I believe people would be regarding this as a Fed pivot. I don't believe a Fed pivot is even on the table. And masterclass students, you'll get my live chart in TM4. All eyes have been on the dollar, and we can see the dollar has been resisting this 110.077 mark. That's been quite solid resistance. And these are daily dynamic smart money sell and buy levels. When it's a resistance level, it's a sell level. When it's a support level, it's a buy level. And when I talk about cracking the concrete, I'm talking about going through a support level. If you go through a support level, that's like the foundation of a house. If you actually find that the foundation isn't so strong, you could drop through to the basement. You don't want that. As professional smart money traders and investors, we always do our A&F because we know that we control the trade, our investments, and the portfolio that we have, but the market controls the return. We can't make the market do what we want because the market will never know us. So what does the market reward? It rewards your knowledge as well as your emotional control. If you gamble, the market will take all your money and more. If you know what you're doing, the market will reward you. It's pretty much that simple. And when we think about the A&F, that is, we consider if price goes against us, like a traffic light, goes nowhere or goes neutral. That's the amber or the caution light, or the green light goes for us. But we consider the green light last. If you want the market to reward you, doing your BORSOG code each and every day will be an absolute game changer. This is daily risk management. What you first of all do is say to yourself, what do I believe the market is going to do? Is it going to go down? That's a D. Flat? That's an F. Or up? That's a U. And that's the first position of the BORSOG code. And how do you think the market will move internally in that 24-hour period? What's the probability it will go against you and your portfolio? Go neutral or go nowhere or go for you? And how synchronized are you with the market? That's the third part. We share our BORSOG codes each and every day in the comments. And we also get into active learning because active learning is the thing that actually will make you a success inside the market. And you'll see we have such an incredible global family. Please reach out and be a part of it. And many thanks again to Jason Rice, who offered 2 partial scholarships yesterday. What a legend. If you're new to the community, a very warm welcome. We have one of the best communities on YouTube. Please feel free to just reach out and say hi in the comments. We'd love to hear from you and to welcome you to our community. And Michael is such a comedian. I'm getting me a bargain. I appreciate so much everybody within our global family. Thanks so much for being here. We know that we've got a potential ground-shaking FOMC meeting coming out in just a couple of days. And then later in the week, Fed Chair Powell will speak. There's a lot of economic data coming out within this week and the next one. This is something to bear in mind because the markets could be very, very turbulent. We also know that no alt can escape Bitcoin's gravity. We can see when Bitcoin comes up, the entire crypto market comes up with it. And you might say, Ken, but that's not right. Look at all these red things. You've got red things there. They're not all green. What actually happens is that what we actually observe when Bitcoin's price comes down, all the alts, bar about 1% of them, will come down, especially with very, very steep and sharp price declines. Bitcoin will control the gravity of the alts, and it's done so for a very long time, and it continues to do so. One day that may change, but for now it's just reality inside the crypto market. And what we can see here has Bitcoin has actually gotten itself over the Armageddon line. Go Bitcoin! But the problem here is this is actually, when you look at this low, you look at this low, this one is lower. That is a deep crack in the concrete. Bitcoin's gravity will play out on all your beloved alts. We can see Ethereum still weaker than Bitcoin. BNB starting to get stronger than Bitcoin's gravity, starting to push out. And this is why we love alts, because when they get stronger, they really rock and roll. They absolutely party. And when they get weaker, that's the flip side of the problem. They can come down very, very fast and very heavy. And we saw that, for example, with XRP. XRP was just rallying like this. Wow, XRP's going for it. And what happened to Bitcoin's gravity? It started to come down. And all the masterclass students and the people within our community would know, ouch, that is not looking good. XRP cannot withstand Bitcoin's gravity. And what happened? Exactly that. It doesn't matter what's actually occurring inside any particular project, how good the news is. The gravity will impact. And what did we see? As Bitcoin started to recover, XRP came back. and it's put in, this is a high, this is a high, but this is a higher high and this is a lower high. Ouch. The sellers are getting in control. Just be careful, everyone. This doesn't mean that we can't make money from crypto. Absolutely we can, but we do have to be mindful. And we can see ADA just aligning with Bitcoin's gravity, Solana aligning with Bitcoin's gravity, Doge aligning. DOT is becoming weaker. DOT is a very quiet project. Gavin is always chilling out. I don't know where Gavin is. Can anybody find out where Gavin is? We know that Charles is not so quiet, and Vitalik, yeah, he's not quiet either. It's interesting that we also see Matic being weaker than Bitcoin. Matic in the past was quite strong. When we did the video yesterday, we were about here, and max pain for the market was at about 20,000. What we witness is the Armageddon line getting concreted through, just getting smashed down. There was a recovery because there's some significant support levels just around here that price gravitated back to. It often does this to go to retest and resume down. So we do have to be a little careful. This could be just nothing more than a retest. But one thing was very, very interesting. When prices were coming down, max pain actually dropped $500 to $19,500. And it hit it. That's a really, really interesting perspective. So when we look at the max pain for today being 19,000, what do you expect? Do you think that, for example, price will come down to the max pain level, or do you think it will go up? I'm really interested in your ideas and concepts. So that's over the next 24 hours, just before the next video. What do you reckon? Do you think that we're going to come down to the 19,000 mark, or we're going to just recover and everything is fine? One key to keep in mind, the Armageddon line is certainly, as some people say, Armageddon me a bargain, but it could be Armageddon smashed as well. So be very, very careful. The last time we had an Armageddon line cross, basically price crossed through it, came back up, went down, came back up, but couldn't reach it. So we're seeing a little bit of a different price pattern here, which is fantastic. We don't want to witness a sell-off, but we have to be careful because we could. And what does an Armageddon line actually mean? It means that there's not a lot of support under. If there's not a lot of support, price can just drop until it finds different foundations to slow its cracking and then eventually find a base. So when we get a crack of the concrete, we must be careful. Even if you look at this particular, I'll zoom in there, going back to that previous Armageddon line, what happened? We came through, we retested, we went down, negative there, couldn't make it back, and poing, dropped like a brick. And when I mean drop, I mean drop. It really, really did drop until it found support inside the market. That's why knowing your support lines is absolutely crucial. Are we seeing the same things here? Well, no, not necessarily. We got a crack in the Armageddon line and we got a repair and a resumption out of that. Does that mean it's all over? Everything is fine? Well, we need to look into our SLs, those smart money buy and sell levels. Let's do that. We know we have a smart money resistance level at 19,999. Sounds like a car price. And we have the Armageddon line. These support levels are quite weak. They're not major supports. So with that in mind, we got a slight relief bounce here, but we've often see before the FOMC meeting, we tend to get a little bit of a rally in the market before it dumps down hard. With max pain at 19,000, it means a lot of people are expecting further negative price momentum. And we're also not far away from the FOMC meeting. So that is an expectation of at least a 75 basis point increase. If it's 100, I believe we could see a very, very sharp sell-off. If it's a 50, I believe we could see a really nice rally. As professionals, as smart money, we always have our three-dimensional thinking in play at all times. We know what we're going to do if price goes down, goes flat, or goes up. When it comes to retail, pretty much retail just has one direction. It's going to go down or it's going to go up. Flat doesn't really play into it too much. It's generally just down or up, and they go all in on that particular position, and that's not a good thing to do. Let's have a look at the longs and the shorts. We can see the shorts have been becoming more and more confident recently. So this is something to be just a little bit wary about. What happened in the past? The shorts spiked up here. What happened to price? It sort of came down within a little while. So let's just keep our eye on what is happening here, because it's not just the shorts that dictate the market. It's the interplay between the longs and the shorts that dictates. We can see the longs have been coming out, but they've started to rebuy the dip, but the shorts are becoming in heavier as well. Over the past 24 hours, there's been 292.91 million in liquidations across 72,012 positions. When we look at total liquidations in the past 24 hours, about 65% have been long. Past 12 hours, 75% short. Past 4 hours, 79% short. Past hour, nearly 79% short as well. The shorts are getting whacked. But the concept is the longs overall got the most whacking. So the concept is that we've actually violated a support line here. We've violated another support line here, just in terms of price, if you follow my mouse over. It's probably easier if I show you. This is the violation of a support line, and this is the violation of another support line. These are cracks in the concrete. Whenever the concrete cracks through a support level, it's become weakened. It might try to repair, just come back up. But generally, if it resumes down further, you have to pay attention to it. There are currently 21,014 cryptos in the crypto market, and global crypto market cap increased 1.39% to $945.92 billion. The greatest gainers over the past 24 hours, USTC, the not so stable coin, up 21.4%, aping it up at 15.75%, Helium rising like a balloon, 15.6% up, Lunacy following USTC, up 14.33%, Celsius 11.32% up, and Chili's just a little over 10% up. The greatest losers over the past 24 hours, Chainlink down 2.8%, FEI down 2.8% as well, Litecoin down 1.54%, Tron down 1.1%, and Polkadot, oh Gavin, you're here, down 1%. Turning to Ethereum and seeing the smart money buy and sell levels there, what we can see is we've got a smart money buy level, a structural support level at $13.53 and 22 cents. And don't forget, these Stanfield levels will change every single day. They're derived from the CTKS confluence method. And when we look under Ethereum, we're starting to get into some quite deep support around 1215 through to 1155. So there's a degree of support down there. But the next level, if we lose 1353, is 1275. What if it goes the other way? The next resistance level is 1477, and the next one above that is 1554. Something really interesting. When we were looking yesterday at Ethereum's price, we had a particular max pain level at 1400. Price went down and it nearly made the 1400, nearly made it. And then when we look, we've got a 1350 max pain level. So we're seeing lower max pain levels on both Ethereum and Bitcoin at the moment. How does this influence your BORSOG code? Do you think we're going up or going down? As a community, we focus on positive excellence because that creates sustainable fulfillment, meaning, happiness, and success. Sounds pretty cool, and it is. And this is all because we need to get out of Zone 1 and Zone 2, the panic zone and the blame zone, into learning and courage and mastering fear, Zones 3 and Zones 4. As promised yesterday, I would read out a couple of positive affirmation quotes that people put together, and Johnny had some really good ones. I really like what Johnny said here. I choose kindness before righteousness. Basically, righteousness is I'm right and you're wrong, but Johnny says, no, I choose kindness before that. That's very impressive. And I love this one. I trust that everything that happens is for me and nothing is against me. Fantastic. And if you have other ones that you would like to share, please share them in the comments. I'd love to read them out. I'll keep on reading these positive affirmations out each and every day. I think they're so incredibly important. And thank you for sharing, Jade. I love this one. The small moments are what matters, and they certainly do. We have our positive affirmations in the CTKS creed, which helps to prime our minds for profitability in the crypto market. The price volatility is crazy in crypto, so you need a lot of positive affirmations. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities and life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And if you have other positive life affirmations, please share them in the comments. I'd love to read them out. If you're interested in obtaining and applying for a CTKS partial masterclass scholarship through the generosity of Purpuratum, Tails, Jason Rice, and many others, you can apply for the scholarship through the link in the description of this video. A good application is of course the starting point, but understanding that the CTKS Masterclass requires persistence, dedication and commitment and a positive excellence outlook, just getting involved with the community is a step in the right direction. I've left helpful links in the description of this video, such as the tax software I use and the Crypto Trading KS Masterclass. Please seek out an ambassador to get 80% off, and you can also apply for the partial scholarship. We recently noted a very big fall off in FedEx because of its forward guidance. You can see it bounced today, well in the last trading session. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.